and it's important to understand there's a difference between a financial crisis and a recession. They're both bad, but they're two different things. 1998 was a severe financial crisis, but there was no recession. I mean, the NASDAQ hit an all-time high on January 1st, 2000. It went on for another year and a half, and there was no recession. 1990, 91 was an example of a recession, but no financial crisis. Some losses in commercial real estate, but there was no financial panic. 2008 was both. 2020 was a severe economic contraction. It's technically a recession, but it's kind of hard to know what it was. It's like, Anthony Fauci shut down the U.S. economy. So what is that? Yeah, GDP fell 32% in one quarter. Technically, sorry, 2 quarters. Technically, it was 2 quarters, but it was really 2 months, March and April 2020. But March happened to be in the first quarter, April was in the second quarter. So it took both quarters down. But that was really concentrated in about 2 months. And then it, kind of came roaring back. But I call it a severe recession, contraction. But there was no financial panic in 2020. The stock market went down 30%, but it like doubled from there. So these things can come together, and we're almost certainly in a recession now. The recession will get worse. So that's not priced into the markets, but you don't even have to guess. That's here. It's going to get worse. The question is, are we in for a financial panic? That's kind of what you were referring to, Brian. And the evidence is yes. The evidence is right in front of your face if you know where to look, but most people don't. It's a little bit technical. I can explain it in plain English, but the signs are there.
Okay. And I guess you go a little bit deeper to this in your separate video, Countdown to Crisis, where you talk about how this crash is going to be fast, bloody, and unavoidable. There's a link below, londonreal.tv/Jim. You also talk about position yourself to profit for this crash in 2022. Do you want to give us any hint about how that's right in front of our face, or should they go watch the video for that?
Well, I can give you more than a hint. Like I said, these things, they're often presented technically because some expert wants to seem smart or whatever, but you can do it in plain English. So basically what we're talking about, the warning signal, and it's a bright red flashing light, is an inverted yield curve. So what does a normal yield curve look like? So the x-axis is time, and the y-axis is interest rate. So, and treasury market's a good example, but there are other markets. I'll get to one in a second. So what are the maturities of treasury? Well, it's 30-day bill, 60-day bill, 90-day bill, 1-year bill, or 360-day bill, 2-year note, 5-year note, 7-year note, 10-year note, 30-year bond. So that's your x-axis. And interest rates they can be negative, but kind of 0 to whatever. A normal yield curve is upward sloping. It's the longer the maturity, the higher there. And that makes perfect sense. If I'm going to lend you money overnight, I might want a certain interest rate. But if I'm going to lend you money for 10 years, I might say, hey, Brian, you got to pay me a little more because, I'm taking more risk, et cetera. Perfectly normal upward sloping yield curve. And whether it's steep or flatter, okay, that's important if you're a trader, but upward sloping. But an inverted yield curve is downward sloping. An inverted yield curve says future interest rates are going to be lower than present interest rates. Well, why would that be? If I'm lending you money for a longer period of time and I want a risk premium and protect myself, why would I take a lower rate? The answer is because I think really bad things are going to happen. And I don't mean me personally. I mean, this is the institutional market. So, and we see this in the treasury market. It flips around day to day, but right now you have an inversion in kind of 2 years to 5 years. So a 5-year note yield to maturity is lower than a 2-year note. And you see it in 7s to 10s. So the 10-year note has a lower yield to maturity than the 7-year note. It's not that the whole curve's inverted, but it's in sections. It is. So at the short end of the curve, 30, 60, 90 days, 1 year, yeah, it goes up. Well, that's because the Fed controls that part of the curve. They already told us what they're doing. We know they're going to raise 75 basis points in July, at least 50 in September. We'll see what happens in November. And then they have another meeting in December. But there's no reason to think the Fed is not going to remain on this path of 50 to 75 basis point interest rate hikes for the remainder of the year, which is going to get interest rates of 4%. I remember when they did this from 2015 to 2018, late December 2018, they went from 0 to 2.5, 2.25, 2.5 range. Now you're talking about going from 0 to almost 4 in 9 months. That took 4 years, from 2015 to 2018. So 4 years to get 2.5. Now you're talking about 8 months or 9 months to go to 0 to 4. That's Volcker territory. So yeah, so the short end of the yield curve is upward sloping, as you would expect, but you get out around not even that far. You used to have to say 3 years, but now like 2 years, it goes down again. Well, this is the biggest money in the world. Treasury market is the U.S. Treasury market is the largest securities market in the world. It's the big money, the institutions, sovereign wealth funds. Yeah, retail can play, but they're not a big factor. And they're telling you that things are going to get worse. Now, just to pile on, as we say in American football, there's another market that's even more powerful, more sophisticated, insiders only, the big money runs the world, and that's the Eurodollar futures market, traded on the CME. So what's a Eurodollar? Well, these are dollar-denominated loans that banks make to each other, usually on an overnight basis, sometimes longer. This is how the financial system is really funded.
The greedy bankers are about to do it again. In 2008, they crashed our financial system and nearly bankrupted the entire global economy. Then they received trillions of dollars in government bailouts. And after, they demanded fat bonuses paid for by you, the taxpayer.
It turns out the banks haven't just been screwing the American taxpayers, they're also screwing over their investors. Turns out the banking industry is the worst place you could put your money, despite enormous taxpayer bailouts.
Now the bankers are back to take away your financial freedom. They lie and tell you that cryptocurrency isn't safe. They try to make it illegal for you to choose how to invest your hard-earned money. They lie and say cryptocurrency is used by money launderers and criminals. But look at the record. It's the banks themselves that launder hundreds of billions of dollars every year to the biggest criminal operations in the world.
Leaked documents have revealed how some UK banks have helped criminals, money launderers and Russians under sanctions.
American authorities discovered that the Sinaloa cartel moved $881 million through HSBC accounts as bank officials turned a blind eye to the illegality.
The bankers lie and say cryptocurrency is not a real investment. Meanwhile, the smartest CEOs in the world are buying billions and billions of it. The truth is that banks lie about cryptocurrency because it makes them scared. The banks take $9 trillion per year of your hard-earned money, and they are worried that they will finally be exposed. They're scared because crypto means they can no longer control your money, which means they can no longer control you. They are scared because you might actually understand your money and intelligently decide what to do with it. Now is the time for us to come together, fight back, and take control. It's time to educate ourselves, our families, and our communities. Because financial education means financial freedom. We know that cryptocurrencies will help us build the new decentralized financial system of the future. A banking system that is of the people, by the people, and for the people. A banking system where access to finance is a fundamental human right. A banking system that is free and fair and welcomes all humans on this earth. The DeFi revolution is happening. We, the people, can no longer be fooled. We choose to take control of our finances. We choose to take control of our freedom. We choose to take control of our future. Join us, and let's take back our financial freedom forever.